What's happening, guys, and welcome back to another Sunday Scan. We have a lot of great topics to cover today. We're going to talk about NVDA, we're going to talk about all the recent movers, and then later on we're going to bring on Stan for the main watches, and he and I are going to go over what we are watching, what's on our radar for the upcoming week. And so let's get right into it. And starting with Traders for a Cause tickets, we've seen some great demand for them so far, and there's still tickets left. And so I just wanted to say, if anyone's kind of on the fence of whether or not they should go to an event like this, I really think that you should take the risk and do it. And, traders in general, we're so comfortable taking risks in the market and putting our money on the line for payoffs in that way. But when it comes to something like an event or Traders for a Cause, you're risking, in essence, the ticket price. That's kind of like your max downside. But the upside is just so exponentially good with the connections you can make, the people you can meet, and you could really, start something that changes your life for years to come. Like Traders for a Cause changed my life when I met Nate in person, and it really kicked off a whole series of positive events. So if anyone's kind of going back and forth of whether or not they should attend, I just really encourage you to do that and take that risk. And I think that you'll find it's an incredible opportunity to take advantage of. And so I just encourage everyone to take a look at the tickets and decide for yourself. So getting right into it, the big move this week was NVIDIA, and we had a 15-point flush from the peak down, and that was over the course of 2 days, Thursday and Friday. And this was on my radar, it was on Nate's radar, and it was on a lot of other traders' radar who were basically anticipating some kind of a mean reversion flush into the monthly options expiration, known as MOPEX, and that's just the third Friday of every month. And that's kind of a congestion zone on where different options activity really groups together. And so back in the day, there basically just used to be monthly options expirations, and then they added weeklies, and then they added dailies. But the monthlies are usually where a lot of the volume goes, especially for big sector moves. And so as you kind of have a name like NVIDIA that's very options driven, you kind of have this buildup going into a big expiration like that. And then what happens is that as you get closer to it, and as those options start to decay more and more, their impact starts to go from being a net positive for the stock to something that works against it. It can cause those big flushes. And so whenever you have a name that's running and option activity is a big part of it, pay attention to big options expirations, and then look for those Thursdays and Fridays where those call options all start from being something that helps the stock to something that as they burn off, the hedges have to come off and it flushes down. So you can just have incredible mean reversion kind of trades around those times. And then if it's something, where you're still bullish on the sector, you can trend them very well kind of leading up to those points. But those are the points to really focus on possible reversals. And the same can happen with puts, whereas if something is options driven and it's been beaten down a lot and there's a lot of put activity, into those big expirations, you can get the decay of the puts, and you can have the opposite effect where things swipe up. And so those are just key times to really pay attention to the options activity and how they can really benefit mean reversion types of trades or strategies. And so a couple other things I want to touch on with NVIDIA is, the whole sector had the same situation. And so you had names like Qualcomm, and that was one that I traded where on Thursday, I started to look for which names would potentially start to reverse, and Qualcomm had relative weakness out of the gate. And so sometimes, even though NVIDIA is the leader, sometimes what I look for when I'm anticipating a mean reversion trade is if there's a sector moving, which one has relative weakness around the time that I am starting to look for those trades. And I can start in that name with puts, and basically as long as NVIDIA doesn't keep ramping higher, if NVIDIA kind of stalls out and you have a name that's relatively weak, that can be a good name to start things off in. And then as NVIDIA confirms and moves down, then going on to some of the stronger names as those start to reverse as well. And an example of that was like ARM, and that was another name where it was trending up. We were anticipating kind of a blow off. We've talked about it on scans before. And then as you get into those big periods where you start to flip your bias to a more mean reversion type of trade, you can look for names that have moved a lot, that are options driven, and that can have a big flush. And so ARM was a really nice trade as well with that. So just a couple things to think about and to get more familiar with these mean reversion trades on longer term trends, but just you have these pockets where they flush really sharply. Tesla had a nice move last week on Scan, I believe, we talked about Tesla having a 10-point move in its near future, and that ended up happening. I had a nice trade on it with calls, and I believe it was on Monday. It was showing relative strength out of the gate, and it just really started to hold those candles, hold above VWAP, and you could just tell that there was money flowing into it. And those are the types of names that I like looking for in the mornings for relative strength if I have a kind of a thesis on a name playing out. So it leveled out since then, but Monday was a really nice trade on Tesla. ZAPP, this was on watch for liquidity trap, and that ended up playing out. And just check out the range on some of these things. Again, that 150 area all the way up to 4. Really, really nice moves on some of these. And another thing that I'm paying attention to in this market is just the sheer amount of volume that is traded on some of these names. You're getting frequently 100 million shares plus traded. Those are the ones that have great range. Those are the ones where, they have a lot of float rotation, you have a lot of bulls and bears in them, and, a move comes from those usually. And so I'm going to flip through a couple more charts and just show, the amount of volume that's really been happening in this market and how you could take advantage of that. But before that, DJT, we also talked about this last week on Scan about they had a filing that some supply can come online. And we really had a nice move down from probably that $40 level down to about 25 or 26 or so. And now it's coming into a range where it could potentially be looking for a bounce. You can see the volume profile start to change. So this is where we'll see if either there is insider selling that's persistent and it kind of slices through those levels, or if it was just kind of anticipation of that dilution and now we're at a key level and we could get a bounce. So that's something that was moving this past week. RELI, again, check out the volume on some of these names, just hundreds of millions and huge range. And so I'm not going to get too in-depth on some of these because we go over these types of charts frequently, but just pay attention to the huge volume movers, the range, and kind of what are the themes and the sectors around some of these. And that can be very helpful as you're trying to basically scan for stocks, get ideas, and look for what kind of trades that you like to take. Another one, MLGO, same thing, 200 million volume and then kind of faded down. And so I just want to highlight the difference between something like this versus something that's like a liquidity trap. So you see something like this, how it had that huge volume day, a lot of range, and then it, really dipped hard and it's going sideways. And, sometimes something like this that has the shape would be on watch for a liquidity trap. But, when you have a move that goes from, 16 down to 4, that's down 75% or so. It's not really on watch the same way that other liquidity traps are, because most liquidity traps, I like shallower dips where it's 30 to maybe 50% or so. And then you can, build back towards those highs and get a nice squeeze out. But names like this, you still can have a cover come in, but it's not going to most likely retest past those highs. Maybe it'll get up to those highs, but that's a huge move. And a lot of times the cover will only move it a few dollars, not, $10 or so. So that's just something to keep in mind, that the sharper or the further it falls, the less upside range you have compared to looking left, as opposed to some other liquidity trap names. NBIO, again, check out the volume, over 1 billion shares, just a testament to how much volume is going into these small cap names, but plenty of opportunity there as long as people didn't either step in on the front side if they're trying to short it, or trying to, long it after it's had that backside of the move. So just something to keep on watch, and, just paying attention to these names with lots of volume. That's where the action is, and that's where the range is. CMTL. So this is kind of an example, I'll go over this one later, but of a potential liquidity trap forming. Whereas if you compare this to the other name that I mentioned, this one had that huge volume day, almost 100 million volume, but then see how the shallow kind of consolidation is happening. And so this is, only $1 off or so from the highs. And so you can have a lot more shorts in there trying to fight it, and some longs that are not that underwater, and so they might add to it. And so if you start to see that volume come back in after the last couple of days of the volume falling by 90%, then falling by 90% again, you could have a nice cover come in, unless they have either an offering or some kind of news that causes it to gap down. LRHC, again, you can see a good amount of volume, and this is almost like a compounding liquidity trap where you have the huge volume on this first day, and then it really drops off, and then that volume comes back in. You have a nice move to the upside. The volume drops off again, so now we wait to see if the volume comes back in, has another squeeze out, or if it just has like that swipe test and stuffs and the backside of the move is in. GRDI, again, over 150 million volume, and just waiting for to see if a liquidity trap plays out or if that was just a swipe test and it starts to fail back down. So, just running through these names really quickly to help with idea generation, to get you familiar with what's moving, and a couple of things to just pay attention to. MGOL, good example, like we talked about how when these names fall super far, this was initially at, call it $1.80 or $2, and then it fell to about those, 30-cent level, 40-cent level. So that's a significant drop. And so you can see if it does have that liquidity trap play out where the volume comes back in, it might retest towards those highs, but they very rarely break those highs because it had to move so far just to get back up to the highs. So the deeper the kind of the drawdown, the harder it is for it to break the former highs, and it's much more likely that they will have a retest of the highs or something in that range, but it's unlikely that they break it. And then NNE, this one's been trending for a while, kind of a small scale nuclear modular name. So you can see that it has those wicks on the daily. So eventually it might come into a nice mean reversion type of trade. But for now, as long as it's holding those levels and soaking dips, then it is still in motion and that trend is still in play. So those are the main names that I wanted to cover. And now let's get into the t-shirt winners from last week. So we had Daniel Westering 155 and Tina 9480. Congrats, you have both won t-shirts for leaving comments in the comments section. And you can email webmaster@investorsunderground.com to claim your prize. And I encourage everyone else to leave key takeaways in the comments, ask questions, let me know if there's things you want me to cover, and we will get to those on Scan. And now, before we bring on Stan, I just want to disclose that neither he nor I are financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. Now let's bring on Stan. All right, we are joined by Stan this week to go over some market thoughts, to go over what he's watching for the week. So Stan, thanks for joining.
Yeah, absolutely, Chris. Thanks for having me back on again, and looking forward to discussing some of these tickers we've had recently. As far as the last week or so, last couple weeks, we've seen some decent action around small caps. We've seen a lot of sub $1 tickers run. We recently had NBIO, I believe it was, that did over 1 billion shares in a day. So, every time we have something like that, something that quote unquote shocks the existing, way of being or supply and demand, etc., it rejuvenates this volatility. It revigorates the market, and then you get a lot of setups that follow after that, whether it would be on the long side, short side, it doesn't matter. The interest for me mainly becomes the volatility, and being able to take advantage of the volatility. So with that, I have a few things on watch. We can pull up a couple charts and go over some of the key things that I'm watching for next week. This one here is GME, and GME, FFIE, AMC. They're all pretty much in the same basket for me. GME is something that I've been essentially trading daily, and my main interest is just big moves. I'm not interested in a lot of these sideways action type of plays. But when we have a day like that where it has wide range, it has a lot of volatility, that's something that I like to take advantage of. either direction, whether short some pops or buy dips and then sell the rips. But it's all intraday type of mindset. So I like to pull up a few days worth of data, kind of see where we're bouncing around, see where the main liquidity areas of interest are. And you can see here, so pretty much 24s and 26s over the last few days is where the interest has been within GME. So if you're patient around some of these levels, then you have a pretty decent range there. $2, etc. That it pretty much just oscillates in within that channel. So GME for me will be something that will continue to be a main watch as long as volatility is there. We may get some sort of maybe like a gap down and flush a lot of these dip buyers here. So that will be something that I'll be looking for. And FFIE similar. I've been short swing on this for quite a while now. Originally, I believe somewhere within the right over here within the 160s, and then covered it up and then rescaled versus the 70s and 80s level. And for me, I'm ideally looking for something like a gap down and flush. The charts, getting there, we could swipe. That's a possibility as well, but that's where your risk management comes in. But for me, ideally something in the 20s will interest me to start covering some of the swing. And AMC, it's just that's the lesser range out of all of them, out of all three. But I still keep it on radar if it provides some sort of a quick deviation from the mean, then I don't mind taking that trade again versus the pops. The next one that I have on watch is DJT. I had this in watch earlier, last month or so, when it was around this time frame, when it was on its way higher, and then once it found its channel, give or take this 54s and 42s, so this $12 channel, then it started creating this topping formation. So the idea was anything sub 42s, if it confirms, look to fade it lower. Obviously they released some I think it was a S1 or an S3, I'm not sure which one exactly, but there was a filing release, and here we are lower. So ideally higher the better on this one. I'll be looking for anything versus maybe this 30s level right here. Again, looking to see what the higher time frame liquidity areas are going to be, and then that will sort of define my overall thesis. But who knows, right? You just have to consider the audience here, the user base. So we could be heading for sub 20s, or as we get lower to 20s, there might be some sort of a bounce. But ideally, higher the better. And again, just looking to take advantage of big moves, and then cover on dips. The next one that I have on watch is this AREB. For Monday, anything versus this 70s level would be of interest for me. Of course, higher the better. Obviously, we found some supply over here into the 84s, 85s, and then once we broke sub this 71, 72s, or ultimately 70s, it sort of became the top. So on Monday, any sort of pushes higher into this congestion area, I'll be interested for fail to follow through momentum. And this next one here is NXL. Decent little trader there. We had a midday clear out, and then it failed. I traded this one. I'll see if we can find the chart. We can put it up here. But essentially, I think I got in somewhere, had a starter right here into the 230s, and then scaled 250s versus 260s, 270s, essentially being the risk. And it covered some once it came back down into the 220s, and then rescaled for the failure, for under VWAP. And then once it continued to stay heavy, I had some covers over here somewhere, I believe, and then rescale versus VWAP. But then once it started holding into 2 p.m., this red to green area, and then 170s pretty much became this soak level. 169, 170s. The plan was always to cover this into close, by the end of the bell or at bell, etc. So I ended up covering this right at the bell, and then a few minutes later, it just it squeezed out. Maybe there was somebody left over. Again, just looking at this chart, it looks nice. Yes, it failed from 260s. Pretty much it failed all the way to 180s. Then checked in with VWAP, and then failed again 180s, 170s. But overall, even if if you didn't cover anything, if you didn't de-risk at some point, then this will make you vulnerable, right? This will make you on a Friday afternoon, after hours, weekend coming up, right? So I think maybe somebody got caught off sides here, squeezed out, and then once I saw this failure again versus the 280s, pretty much previous top right over here. I actually got back in, just a quick reactive trade, and then ended up covering somewhere over here to 220s, and then 215s or 16s, something like that. And then I left for today. But this will be a main watch on Monday. Ideally, higher to better. Anything over 260s, right? If this 260s starts to build, then who knows? Maybe we'll have a good opportunity even higher. Obviously, the volume has been building for a few days now, so anything over this 260s, then we have the 330s, and then who knows from there. But this will be a main watch on Monday. Any sort of exhaustion moves, I'd like to participate. And the last ones that I haven't watched are this NVDA. We have NVIDIA, ARM, and SMCI. Similar basket like the GME, FFI, AMC. I'd like to bunch things together because I'm able to sprinkle risk across, so I don't have a single name exposure. But the main watch, obviously, NVIDIA. This is post split, nice little exhaustion move here, and then little gap down. So pretty decent volume. We'll see what happens on Monday. But again, this one is something that I'm interested in a bigger moves, and then look to scale from there. So that will be for NVIDIA. SMCI similar, and then ARM. ARM offered a decent opportunity here on I think it was Friday, yep, or actually the day before, on Thursday. Nice little failure there versus VWAP, and then it flushed nicely. So for me, ideally, ARM, we'll see if it starts to base on this 150s, then it could curl up, and then we could see 200 plus for the next leg higher. Or if this 160 starts to get heavy, this 150s, then if it fails, then we could see some retracement. But I think a lot of this will we just need to see what SPY does, what NVIDIA, etc. are in the according lane, according markets are moving. So that's pretty much it for me for next week's watches. And Chris, I think you also had ARM on watch as well. we can pull that up, and if you want to share some of your thoughts.
Yeah, and I had similar thoughts to what you had on it. So, as we've been watching, ARM had a huge comeback basically with the AI names, and you can see kind of the difference between when some insiders were selling, when you saw that previous, sharp, flush, a month ago or a month and a half ago, and then just kind of the steady build back. And so, we've talked about this a lot with the AI names, how when you have a sector that's trending, you have an overall kind of bullish theme. You'll get these pockets where they'll, be steadily trending up, then they'll accelerate. You'll get the call options going, and then you get into something like the end of the month, end of the quarter, even the end of the week sometimes. And when you have a huge buildup of these call options, basically getting closer and closer to expiration, and then you have them basically shrink and come off, you can have a huge amount of basically selling happen when those call options come down. And so these kind of like resets, they're not necessarily bearish, but it's more just resetting the tape and shaking out all those people who have just been along for the smooth ride. And now it's like, okay, rides get a little bit bumpy. Who's still here? And then that's where you can kind of find out, is there an actual bidder, or was this more just like short term momentum? But I think as long as ARM is holding, kind of those areas around the prior breakout from a couple months ago, I think it could start to build again potentially, as long as the AI sector in general is not reversing. And that we'll be watching NVIDIA for that, just to see if that's the leader that's kind of doing it. But one other thing I want to mention on ARM is that take a look at the volume profile, and you can really see the difference between like a steady grind up, which it's had over the last month or so, versus if you go back and look at the volume, on that capitulation to the upside when it had that earnings, yeah, in that area, you can see that's really like a capitulation. That's where you have hugely abnormal volume all happen at once. You have a huge wick to the upside, and then it slams down, and that needs a lot of time to reset. But we didn't really have that huge volume blow off along with the chart building. And so these are the moves that they can recover a little bit easier, and they don't need a month or 2 months to kind of reset. So that's just something I have in the back of my mind as I'm watching this. But again, I'm looking to see if it will hold levels or if it will kind of just stall out or flush with the AI sector. And then on to the next one, I have MU on watch. So this is another AI theme one, and they actually have earnings on Wednesday, the 26th, I believe. And I think this will be a big kind of like rotation. So we'll see how like the memory side of the AI kind of I sometimes compare it to like a room where it's like you have this general room, but then you have like different corners. You have memory, you have the data centers, you have all these different things. So I think some of the attention is going to shift over to the memory side of the AI theme. And, I think that this will just be telling to see if, okay, is the memory side, is MU actually participating in all the upside and the earnings and the revenue growth of the AI sector, or is it just kind of running up with them and then the earnings are like, we're actually not doing much with it? So that'll be on watch to see if we get some rotation. And then another name I have on watch is Google, so Googl. And this one has really been building very cleanly for the last month or so, and you've kind of had it be a little bit more of a quiet name where it's building. It hasn't really been on anyone's radar, but it's pushing up towards those highs. They're doing well, in this current market. So I think that we could get a nice push past 180, and if it starts to build, if the volume agrees, then I think we could be moving towards the 190 and maybe eventually 200 over the course of a month or so, as long as the market holds up. So I'm watching a name like this with calls just to see if it's holding trend, holding levels. You get little dips, but then it just starts to build and it holds over VWAP and it's holding candles well. And those are the names that I really look to for like what I call relative strength. And that's where if you have a neutral or a bullish market and you have a bullish theme, you're looking for basically what are the strongest names of that day and of that week. And so off the open, what I'm looking for is which names are gapping up a little bit, but every time they dip, they immediately soak back up, and that kind of tells me that like you have like the market unopened, you have some other things that can cause flushes, but if you have like kind of standing orders ready to buy this thing, as those market unopened orders or as those little sell orders come through, they're immediately soaked up into a level, and that level starts to rise because you have someone who wants to get in there. And so Google is going to be a big one on watch for me this upcoming week and over the next couple of weeks, as long as the market holds up. Another name I have is IREN, and this has been trending quite well with kind of like the smaller Bitcoin names that we talked about. And Bitcoin's had a bit of a dip. It's at 64K or something like that right now, and we've seen some of the larger crypto names kind of sell off. You saw things with Coin that really had a big pullback recently, and you had like some of the altcoins in the crypto space. So they flush. So sometimes you have like the volume reduce. So basically, in the crypto sector, this one has held up pretty well. But if Bitcoin starts to see some more pressure, I think that even the smaller names could fall under that same pressure as the large ones. So I'm waiting to see, is Bitcoin going to flush down to 60K, or is it going to start to build back up towards 70? And then I would have this name on watch for either relative strength if Bitcoin trends back up. But if Bitcoin trends down, this could have a pretty nice reversal and flush several dollars. So I'd be looking for puts on a name like IREN. And then finally, I have CMTL, just a small name. This one was building over the last couple of days, had a huge volume day, and kind of the things that I look for with a potential liquidity trap setup for the long side. And so, you had that huge ramp up, that huge volume day, and then it just starts to kind of base and stay in that channel. And you can see the volume dropped off. So it went from whatever it was, 80 million down to 10 million, down to 2 million. And again, that's what we look for with that volume basically drying up. And so you have people who are most likely trying to short this, thinking it's just going to fade right back down, but all the volume goes away and they're still in it. And then they're like, okay, if this starts moving the other way, I have to cover, and then you'll see the volume come back in. So not high conviction, but it's more if like the stage is set for a liquidity trap if the action agrees. And so if it starts to build up and you start to see that volume come back in and it breaks either above key levels, or if it looks like it's going to ramp, you could buy it a little bit early in anticipation of that. So that's just on watch. But if we get to Monday and it's just very weak or it gaps down or something, then that can be invalidated. But it's more just I like the structure of this going into it. So those are the names that I have on watch for the week. And Stan, yeah, you had some great watches there, and I'm watching a lot of the same things. And I just feel like in this market, especially around like when the quarter ends or things like that, you have a lot of like reshuffling, and you have profit taking in some sectors, you have new money going into other sectors, and so I feel like we're at a period of time where there's a shuffle going on, and we're about to see what this summer is going to kind of look like. Whether small caps stay very active, whether the AI consolidates, or whether it starts to build again. So I'm just watching where new money is flowing and what the action is.
Right. Yeah. I mean, I think that's a very very smart play there, and ideally, the action continues. It's been a relatively action packed summer so far. I think just across the board in the market in general, we've had a tremendous small cap opportunities, a lot of large cap opportunities as we saw recently. So it's been a good good active summer so far, and hopefully continues.
Yeah, totally agree. So yeah, Stan, thanks for coming on, sharing your thoughts, sharing your watches, and I'll see everyone in the room. And just a reminder to like, subscribe, and leave a comment or either a takeaway or a question or just something that you want to hear more about. And that's what we're trying to do with these scans, to help give you ideas, to help explain some concepts and things that we're watching. And then we want to interact with you. So if you want clarity about something, if you want us to talk more about a volume profile, a setup, a reactive trade or something like that, just let us know in the comments and we will answer those. But with that being said, Stan, I hope you have a great week, and I hope that everyone out there has a great trading week.
Great. Thank you, Chris. You as well.
Thanks.
Have a good one.